You have exactly 48 hours. And what happens when silver opens Monday morning could decide everything. It could mean we just saw the bottom of the scariest drop in 6 years, or it could mean we are about to fall even further to prices most people think are impossible. I'm going to walk you through exactly what happened this week. I will show you the 3 price levels that will decide everything on Monday, and then I am going to reveal something about the data that should make the big banks nervous and get everyone who understands what is actually happening very excited. But first, let me paint a picture of the absolute chaos we just lived through. Thursday, February 12th. Silver opens in Asia, and it is already looking weak. Then Europe opens, and the selling gets faster. Then the United States releases a report about jobs. It says 130,000 jobs were added, but people only expected 70,000. And silver doesn't just fall, it crashes. It drops 10% in a single day, falling from $86 all the way down to $76. This was the 3rd worst day for silver since the big sickness started years ago. The only worst days were the huge crash we saw in January and the first panic back in March 2020. But here is what makes Thursday different. This wasn't a normal market move. This wasn't a surprise from the Federal Reserve. This was forced selling because the rules of the game were changed. The people who run the market raised the cost to trade silver. This forced people who borrowed money to trade to sell their silver whether they wanted to or not. And they picked the perfect time to do it, right before a report that would have sent silver prices soaring. Because on Friday morning, a report about inflation came out. It showed that prices for things we buy are rising slower than before. It was good news for the economy. Usually when that happens, the value of the dollar goes down and the price of silver goes up. And that is exactly what happened. Silver rocketed up 5.5% from Thursday's lows. It closed on Friday around $78. So in just 2 days, we saw silver crash by $10 and then bounce back by $5. That is a huge swing. It moved almost 20% in just 48 hours. And now we sit here on Saturday, with the markets closed, asking the only question that matters. What happens on Monday? I'm going to give you 3 price numbers. Write these down. Remember them. Because one of these 3 numbers is going to get tested on Monday, and how silver reacts will tell us everything about where we are going next. Number 1 is $75. This is the danger zone. If silver falls below $75 on Monday and stays there, we could be in trouble. It means we might fall even further, maybe down to $70. And below that, there's a level around $55 that acts like a safety net. I don't think we will go that low. The real world need for silver is too high. But if Monday starts weak and we break $75, computer programs that trade automatically will start selling, and we could see a quick drop before real buyers step in. So if we are at $75 in the first 30 minutes of trading on Monday, watch carefully. If lots of people are selling, it's a real drop. If not many people are selling, it might just be a trick, and the price will probably bounce back up. Number 2 is $78. This is the waiting room. This is where we ended on Friday. And here is what is interesting. $78 is right in the middle of the fight between the people who want the price to go up and the people who want it to go down. There is a strong ceiling at $80 that is hard to break through. And there's a floor at $76 where buyers stepped in on Friday. If silver opens on Monday and just stays between $76 and $80 all day, that is actually good news. Why? Because it means the people who bought on Friday are not selling. It means the selling has stopped. It means we are building a solid base. When prices stay steady after a big move, it is like building a foundation for a house. It prepares the market to go higher later. If Monday is boring and we just drift around $78, that is the best thing that could happen for people who want silver to go up. So watch how much the price moves. If it is stuck in a tight range with not much trading happening, it is like a spring being coiled up. Something big is getting ready to happen next week. Number 3 is $80. This is the breakout zone. $80 is a very important number. It acts like a wall. If silver opens on Monday and climbs back above $80, especially if it does it quickly with lots of buying, then Thursday's crash was just a trick. It was a way to scare people into selling before the price goes higher. If we get above $80, the next hurdle is $83. And above that, we are looking at $86 to $88, which is where we were before everything crashed on Thursday. And if we get back above $90, then everything that happened this week was just noise and we are back on track to reach $100. So watch the first 30 minutes on Monday. If silver opens at $78 and immediately pushes to $80 with lots of buying, that is big money stepping in. That is the smart investors saying the bottom is in. If it climbs slowly to $80 over several hours, that is still good, but not as strong. Now, let me tell you why Monday is so important. It is not just about the lines on a chart. It is about who is buying and who is selling right now. A report just came out that shows us what the big traders are doing, and it shows something incredible. The big speculative traders, the ones who bet on price moves with borrowed money, have sold almost everything. They cut their bets that silver would go up by 38%. They are holding the smallest amount of silver they have held in almost 2 years. These are the hedge funds and the people who jump in when prices are rising and panic when they fall. They are gone. Gold traders did the same thing. They cut their bets by 23%. This means the weak hands, the people who get scared easily, have been washed out of the market. The market is no longer crowded with people hoping for a quick buck. And here's the thing about this data. When everyone who is going to sell has already sold, there is nobody left to drive the price down. That is when the bottom forms. Not when a chart looks perfect, but when the sellers are gone. That is where we are right now. Let me connect the pieces for you. The timing of Thursday's crash was not an accident. The people who run the market raised the cost to trade. Then a report came out that wasn't terrible, but it wasn't great, and silver dropped 10%. Then, less than a day later, good news came out about inflation. Prices are rising slower, which means interest rates might come down, and silver bounced back up. If you are a big bank and you bet that silver would go down, and you know good news is coming on Friday, what do you do on Thursday? You don't let silver stay high. You create a reason for it to crash. You force the people betting it will go up to sell. Then, when the good news hits on Friday, you buy back your bets at a lower price. This is not a guess. This is what the data shows. This is what happened. And the fact that silver bounced back so hard on Friday tells us that real buyers were waiting for this. They wanted lower prices. They got them on Thursday, and they bought on Friday. But here's the part that should make you pay attention. In 2 weeks, a very important deadline is coming. People who bought contracts for silver to be delivered in March will have to decide if they want the actual metal or just cash. Right now, there are contracts for over 400 million ounces of silver, but the warehouses that store the silver only have about 100 million ounces available to deliver. That means for every ounce of real silver, there are 4 paper claims for it. And if you look at all the contracts versus all the silver in the warehouses, it is even worse. It is like 500 to 1. Now, most people don't ask for the actual metal. They just trade the paper contracts. But here is what is different this time. Right now, the price to buy real silver today is higher than the price to buy a contract for future delivery. That shouldn't happen if there is plenty of silver. That is a signal that there is a shortage. In February, people have already taken 13 million ounces of silver out of the warehouses. In January, we saw new buyers coming in just to demand physical metal. Warehouses in Shanghai are at their lowest levels in 15 years. Warehouses in London are empty. China made rules on January 1st that make it hard to send silver out of the country. This locks up a huge amount of the world's silver inside China. And dealers who sell silver coins in bars are saying they are sold out. The extra price you pay for a real silver coin over the paper price is very high right now. So you have a paper market that just crashed, but a real world market that is screaming for more silver. And in 2 weeks, people have to start delivering on their promises. What happens on Monday matters because it sets the mood. If Monday starts weak and breaks $75, some of those people holding March contracts might give up. If Monday starts strong and breaks $80, new buyers might come in before March. The chance for a big price jump is real. The pieces are in place. And Monday's opening will tell us which way we are going. So here's my game plan for Monday morning. You can use this too. First 15 minutes, 9:30 to 9:45 a.m. Watch where the price opens compared to where it closed on Friday. If it jumps up above $79, that is a good sign. It means buyers in Asia and Europe are active. If it drops below $77, the selling isn't done yet. If it opens around $78, it might be a slow day. First hour, 9:30 to 10:30 a.m. This is where the big players make their moves. Does the price hold steady or does it reverse? Big buying volume in the first hour pushing toward $80 means the big institutions are buying. Low volume and choppy prices mean they are waiting. Watch the $80 test. If we get close to $80, watch to see if we break through or get pushed back. If we hit $80 and fall back down, we are probably going back to $75. If we break through $80 and stay there, we could run to $83 quickly. Watch gold too. Gold closed at $5,030 on Friday. If gold is pushing toward $5,100 on Monday and silver is lagging behind, that is a warning. If they are moving together, that is healthy. If silver is doing better than gold, that is when you know the real move is starting. Now, let's zoom out for a second. It is easy to get lost in the daily ups and downs. Silver has nearly tripled from its lows. It went from $28 to a high of $95 in January. Now it is back to $78. That is a 40% drop from the highs. Is that a lot? Yes. Is it normal for silver? Absolutely. Back in 2010 and 2011, silver went from $18 to $49. On the way up, it had a 30% drop. In 1979 and 1980, silver had multiple drops of 25% to 35% on its way to $50. Violent drops are normal for silver. This isn't like the stock market. This is the most volatile major asset on the planet. If you can't handle a 40% drop, silver might not be for you. But here's what hasn't changed. Central banks are still buying gold like crazy. They are expected to buy over 850 tons this year. The dollar is still weaker than it was a year ago. Silver is still in a shortage for the 6th year in a row. Warehouses are still emptying. China is still keeping its silver. The extra cost for real silver is still high. None of the reasons to buy silver have changed. Only the price has changed. And the price drop just cleared out all the people who were just guessing. That is why Monday matters. We are either going to confirm that the bottom is in and start going up, or we are going to see one more drop to $70 or $75 before the real buying starts. So what happens next? Here's what I think. Monday will open somewhere between $76 and $80. We will chop around for the first hour as everyone figures out what happened over the weekend. By Tuesday or Wednesday, we will get notes from the Federal Reserve meeting. If those notes show they are worried about the economy, then silver is going straight through $80 and heading back toward $85 to $90 within a week or two. If the notes say they are still worried about inflation and the economy is strong, we might retest $75 before finding a bottom. But either way, the March delivery period is going to be interesting. If you bet that silver would go down, and you see people asking for delivery of real metal, and you know the warehouses are empty, and you know China isn't selling, how confident are you? That is the question the banks are asking themselves this weekend. And Monday's price action is going to give us the first hint at their answer. Look, I know this week was hard. If you bought silver at $90, you are down. If you bought at $85, you are down. I get it. The swings are crazy. The game feels rigged. It is frustrating. But you need to understand something. This clear out was necessary. Too many people were just gambling. Too much borrowed money was in the market. Now those people are gone. The market is clean. And the real buyers, the central banks, the industries that need silver, they are still here. Monday is just one day, but it is the first day of the next chapter. And you are going to want to watch those three numbers like a hawk. $75 is the danger zone. $78 is the waiting room. $80 is the breakout. One of them is getting tested Monday. And how we react tells us everything about where we're going next. This might be one of them. See you Monday.